The market is not necessarily recognizing how nasty it is on the ground for some folks out there and in some parts of this country. It's going to be something that likely rears its head later, but is going to be very difficult to assess, from a futures level.
And we are now joined by Angie Setzer, the goddess of grain. Angie, how are you?
I'm great. How are you guys?
Doing great this morning. The one thing that comes to mind, always in the back of my mind, I may not talk about it as much, like we said, but that's why we have you here, is when dollar's weak, what does that do to commodities? Give us the
Yeah.
landscape right now, what you're seeing in the commodity space.
Yeah, I mean, when the dollar is weak, it tends to help support U.S. commodities. I mean, it makes our commodities, our agricultural products cheaper in the world landscape. It's a far better place to be when it comes to competing in the world market than what we saw when obviously we were trading at recent highs on the dollar there. The biggest problem that we have currently, though, is that we just still have I call it our yeah, but problem, where we have all of this uncertainty going forward on what that looks like. So we are getting business on the export side. We actually have been getting, a tremendous amount of business, you could say, for new crop wheat. We're well ahead of where we were a year ago. And wheat tends to be one of those most price sensitive commodities when it comes to how the dollar is trading. But we've also seen a great demand for corn, over the last year, and we remain, competitive in that market structure here out into the end of the calendar year currently.
What's kind of your forecast for what you see coming into the summer?
It's all, going to be very, very weather dependent at this point, which feels so blah to say. I mean, obviously, weather is going to impact agricultural products here as we move ahead, but we're also going to be watching, trade tendencies and things like that. I mean, when it comes to ag products, when it comes to, the outlook, I feel like we're stuck in one of the most negative mindsets that I've seen in quite some time. You look at the corn export book currently, like we are setting near records when it comes to not only, shipment pace, but also sales when it comes to old crop exports. We've known that Brazil was going to come back into the market here in August for quite some time. But traders are now saying, oh, well, we're probably going to cancel these remaining bushels when logistically speaking, all these other things, it's not going to necessarily happen. The economics of it don't say that it'll happen, but the sentiment or the mood when it comes to those who are addressing what's going on in the market or talking about what's happening in the ag space is very negative. It's just met with this, we're going to destroy trade through tariffs, which at this point in time we really haven't seen. And to be completely honest, most of these countries, your buyers are going hand to mouth because of the fear over what it'll look like cost wise as we move forward. But from an overall standpoint, it's not necessarily something that you're going to see impacted greatly, on the food side. And so I would say the landscape currently is just one of those where it is, even if you run into something positive, even if you have a fundamental story or a situation like with Russia and Ukraine over the weekend, where 3 years ago we'd have probably been trading limit up on wheat. Folks are like, it doesn't really matter much. The sentiment is probably one of the worst I've seen surrounding commodities, even with tight global supplies, even with, what could be extreme risk to our available supply versus demand as we move forward. So everyone's just kind of the mindset that we have plenty. The end user isn't necessarily engaged. You have end users that are still covering their wheat needs for July, which is very much out of character. Typically, you would see them covering at least through the end of the calendar year, if not through the first quarter of the following year. And so the mood is just blah, if I could say it. But when it comes down to it, too, at the same time, I've been saying for a while we have this yeah but problem, and that comes from tariffs, trade, the uncertainty that is all behind there. You've got your geopolitical issues, and so the sentiment in the landscape feels exceptionally negative at this point.
I want to talk about China a little bit because you hear all kinds of rumors. China's not going to buy grain from the US anymore. What does that mean for the markets? Are we seeing this happen at all, or do you foresee this happen, or, are we going to be able to clear this whole thing up and find some sort of deal that both China and the US can deal with?
Yeah, I mean, I think at this point in time, this is the best time for China to make it appear as though they will not purchase U.S. commodities from a seasonal standpoint, from a historical standpoint. Brazil has stepped in. We're going to have more in the way of corn available out of Brazil if they come to the market there. Brazil obviously has had an increase in production. You've got Argentina able to kind of cover the gap a little bit. But this idea that China is going to completely ignore or remove U.S. bushels out of their import structure, it's far-fetched. Is it possible? Sure. But a lot of folks forget that in 2018, part of what allowed them to really restrict their imports from the U.S. was they lost 32 million hogs to ASF. At this point in time, their feed margins are exceptionally solid. They've seen their protein sector kind of get back on its feet. You're seeing an increase in feed demand. You're seeing, like I said, improved margins there. And so to me, it's interesting just in the sense that who does the majority of the imports for reserves is the China government. And so what do? They write the check to themselves when it comes down to it. They've already set a precedent that if they need the supplies, they will place that product on an exemption list. And so it's super possible that we could see, a situation here where, China continues. Do they cut back a bit? Sure. The biggest worry to me, I think, is how we tackle the EU, because the European Union is kind of who stepped in as our second largest importer. And so if we ice both of them out, or if we have issues with both, then it could be problematic for new crop exports. But when it comes down to it, you're probably going to see a relatively static export book. But because of the unknowns that we talked about, because of the uncertainty and the comfort level in the global market structure, where we're not running out of soybeans anytime soon, you're going to hear more and more about, oh, China is not purchasing new crop soybeans, et cetera, et cetera. It's not a problem until they continue to not purchase U.S. soybeans out into October, November. Obviously, we don't want to wait that long before something is done. I think you will see something done ahead of time, though I fully expect the next 2 to 3 weeks to be an escalation to the situation. It feels like you get escalation before you get resolution. Like I said, I think a lot of talk about China completely cutting out U.S. soybean imports is not likely to happen. Could they reduce? Could they take it down a couple hundred million bushels? Yes, but that's also less supply that would be available out of Brazil to other customers. We're seeing a growth in global crush demand for biofuels, not only in the US, all around the world. And so it's a factor. It's something that we want to watch. Obviously, they're our largest trade partner. The biggest thing to me that I think is just if we do put together a trade deal that has quotas in it or has an amount of grain that they need to be purchasing, that's not something the market is factoring in at this point in time and would be a bullish surprise like we saw in 2020.
And then what is kind of the ethanol market kind of looking like? And for those that don't know, we use corn to make ethanol, which is then put in your gasoline. And I know that's been kind of, well, for a long time, kind of a point of contention on, are we going to do E15, or, what are the mandates going to be? And so what is that kind of looking like with this new administration?
A national E15 allowance, basically year round, would just to provide an ability to invest in more infrastructure. I don't know if you see it, honestly. I think it's probably one of the last things on the list of things that the administration will accomplish, though we have seen several bills in the Senate and the House kind of work their way through where, it would try to allow for the year-round E15. And so we'll be watching that. The biggest thing that I've seen with ethanol that I think came out of left field for a lot of folks that they weren't necessarily paying attention to is the growth in global demand for ethanol that we've seen. And really a lot of other countries around the world have come to the U.S. to tap into the ethanol supplies. You're seeing Japan, Japan wants to target E10. They don't have an ability to produce their own corn enough to generate. They're basically going to import ethanol, and the U.S. is probably going to be their supplier of choice. You've got Brazil that's upping their ethanol demand, so they're soaking up more in the way of the world's corn. Our ethanol exports, U.S. ethanol exports, have been record high. And so the ethanol market itself, everyone always kind of lamented over the blend wall, which is, this sort of 15 billion gallons worth of ethanol into the world, or into the domestic gasoline supply, and it was really tied to what gasoline demand would look like going forward. We were worried about electric vehicles tapping into that, some of these other things. But really, when it comes down to it, it looks like the biggest growth that we'll see in ethanol demand will be around the world. And I think, when you pay attention or if you talk to anyone from the U.S. Grains Council, I joke they're the world's best ethanol missionaries. I mean, they're spreading the word of ethanol anywhere they can. And it's really been something that we've seen over the last couple of years that is very obvious and something that, I think will continue as we move ahead.
Angie, do you watch COT data at all?
Yes.
So I'm looking at the wheat market, and I gotta tell you, I mean, the amount of commercials that are short, I'm just curious as to why you think that is.
Yeah, the commercial short is an indication of farmer selling. It's an indication of ownership and a big indication of lack of buying. And so I'd mentioned that earlier, kind of in passing, that you have traders in the physical wheat market currently that are saying end users aren't even engaged out much beyond August. They're only still currently covering July. It's a very hand to mouth sort of approach to the market that isn't very typical. And so in the commercial space, if you're an elevator, which is my past life is merchandising physical grain, when I buy from the farmer, I'm going to short that position on the board, and then I'm going to turn around and try to market that to a miller, a feeder, something like that. And that's going to offset that short position, and it kind of just disappears. If you don't have an end user engaged, if you don't have buying, I mean, that's one of the things that it fits into in a great way, is there was a lot of folks across the EU that were saying their sales were 40% of what they were a year ago. And so I think that's obvious, and you've also seen managed money go exceptionally short in wheat. And so that could be super explosive, in my opinion, if you have an end user come in that decides they need coverage, or if you see, a short squeeze on the managed money side and they need to jump, because a lot of the farmers have kind of put what they want to position wise on from a selling standpoint and aren't really going to get engaged unless the price gets a bit better here.
How are farmers kind of dealing with these price levels? They've been pretty depressed. Does that do anything to change kind of what they're growing or, the amount that they're growing at all?
This has probably been the worst stretch of business that I've went through. You've seen your costs inflate. Everyone's dealing with inflation, and the farmer, it's no different. I mean, we're growing a crop that, we're looking at less than $700 worth of revenue in a normal year, and it's going to cost $950 to $1,000 just because of the increase in cost. So it's pretty depressing out there. There's still a lot of stories of farmers not being able to kind of finalize their financing, which is almost unheard of this late in the year. And there's reports of landlords discovering that their farmer just couldn't get his financing and is not going to be able to farm the ground that they have. I think the market is not necessarily recognizing how nasty it is on the ground for some folks out there and in some parts of this country. And that's going to be something that likely rears its head later, but is going to be very difficult to assess, from a futures level, just simply because it's here, there, and everywhere. But it's, like I said, it's not in the norm. And it's one of those things that unless you're in the trenches talking to these folks every day, you don't necessarily realize how bad it is.
Angie, we'll end it there. I can't thank you enough for joining us first day of the month in June. And as we get into summer, understanding what's happening in the commodity space, we don't talk about it enough here. And Angie, thank you so much.
Thank you.
Thanks for having me.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.